You say it certainly is one of the more complex macro geopolitical environments that I think we've seen in quite a while, with some different moving parts. But to be honest, from the first day of the quarter to the last day of the quarter, we saw zero difference, steady demand. How is that possible, including a government shutdown?
Yeah, Jim, it was an exceptional quarter for our teams. They're executing incredibly well. We saw tremendous balance around the world. I mean, our Europe, Middle East, Africa orders grew 11% in the quarter. Asia was up 6%. The Americas grew as well. So we saw, phenomenal balance there. We saw balance across our technology businesses and really balance across the customer segments. And again, we were looking particularly in January because we have the unique situation of having the third month of our quarter in January, and we were looking for any sort of shift in the demand from our customers, and we just saw nothing. We saw exact same performance in January that we saw in November and December as well. So really pleased with how the teams have executed, particularly in light of all the complexity out there right now.
Chuck, you're changing your model rather rapidly, and I'm not sure people understand it. For instance, 65% versus 54% of your software is now subscription. Can you tell people what that means for your margins and for your forecasting ability?
Well, Jim, what it really means is that we have an opportunity to, first of all, for our customers, we'll deliver continuous innovation through these software offerings during the life of the subscription. But then from a business perspective, what you haven't seen yet is the opportunity for us, in 2021 and 2022, when the bulk of this begins to come back up for renewal, we're going to have an incredible base of software that we'll get to go renew. And that's different than what we've done for the last 25 years, which is, really where we've had to sell 80% of the revenue that we achieve in any given quarter, we had to sell during that quarter. So this gives us an opportunity to revisit, continue to deliver innovation, and then remonetize the software assets that we have sold to our customers.
But I want people to understand that there was a downgrade the other day. Chuck, I'll do this because you're too much of a gentleman. The downgrade the other day was very really very ill-advised, and talked about your forecast may not be that positive. But Kelly Kramer, who is your dynamite CFO, actually talked about margin expansion from the decline in DRAMs, and you gave one of the best forecasts for any of the technology stocks I follow. It looks like margins going up. You have a lot of money. You obviously increased the buyback by dramatically 3% yield, and yet you still have $40 billion in cash?
Well, Jim, we had balanced growth across our security portfolio, which was the fastest growth we've seen in our security business in roughly 4 years. We saw tremendous growth in the applications business, up 20+%, and we saw strong growth in our core infrastructure systems, which was one of the big priorities we had a few years ago, which is how do we deliver enough innovation back into our core so that we can grow those big franchises in addition to growing the markets that we've expanded into. And I think we saw the results of that come through this quarter. And obviously, our commitment to capital returns are still there, raising the dividend, increasing the buyback. So overall, it was a very good quarter for us.